if you're Mr. Beast and you're promoting a bank product or something like that, and then you're like, okay, wow, 10 million people are now going to use this bank product because he gets 20 million views, and let's just say there's an insane conversion. That changes everything for these companies. And as a result, your $50,000 worth of equity that you got today should be worth substantially more.
What's up, everyone? Bringing you episode number 4 of Creator Economics. We're having so much fun doing this. My name is Reed. I introduced myself last time in a few other episodes, but I work with MrBeast and a few other creators. We have Blake as well.
Yeah, early stage investor at Ludlow Ventures, and yeah, super excited to be back for a 4th episode.
So interesting topic that we wanted to dig into today, something that Blake probably gets a lot more questions than I do on this, although some people do bring this up from time to time, but it revolves around creators taking equity positions in companies. Why should they do that? If they should even be looking to take equity in companies aside from just cash. So that's one thing we wanted to get in today, and all the stuff that revolves around this conversation.
Yeah, I think there's probably 2 high-level ways that creators would get involved in this world. I think one is obviously just from an angel investing or investing standpoint. Once they're at a good enough point in their lives, maybe they start investing in tech companies or software, or, I don't know, restaurants, whatever it might be. And then the other side of that is, which I think we'll probably focus on for this episode, is just around actually like taking equity in exchange for services. And I think in our example, or what we'll be talking about, is around maybe doing a brand deal or promotion, almost like an endorsement deal. That's probably the cleanest or closest way, but getting equity in exchange for being a spokesperson or an endorsement.
So I get harassed about this one all the time, and people say, did MrBeast get equity in Honey? No one's ever been too sure, but I always get the question. No, we did not have equity in Honey. We started working with Honey in 2017. Trust me, we tried to get equity. We believed in the company when we first heard about it. When we talked with their marketing director, the founder would not budge on giving us equity. They were already valued at over $1 billion at that point. They did not need our money to even let us invest. So we tried. That was the situation, where Jimmy and I were like, listen, we do need the money, but we're also willing to take some equity on the back end. Didn't end up working out. So just to address that one right off the bat, but Blake, what are some good examples of creators taking equity in companies and that actually panning out?
Yeah, I mean, I think probably like Shaq is notorious for doing this, and I think actually in Shaq's case, or some bigger celebrity examples that we'll probably touch on, it's more of them actually just leveraging the fact that they're famous and leveraging their access to get into these companies and saying, hey, I'm going to do endorsements, and like Shaq with Ring is a good example. But there's I think going back to even the Honey example, there's a point where for Jimmy or MrBeast, as most people know him, he was at a point where he probably really prioritized cash, and I think from a founder's or from a company's perspective, they're super protective over equity, especially as it starts to become worth more. And I think that as there is this like sort of perfect opportunity where when you're, I don't know, a Series A or Series B company, you might have just raised $10-20 million, but you're not willing to pay a big creator for 10 videos or something like that. But you're like, look, maybe there's this perfect opportunity where we can say, hey, I'll give you, I don't know, 0.25% or 0.5% of this company in exchange for, I don't know, 5 or 6 videos. And obviously that's all just rough math, but the context or important thing to highlight there is that most early employees of companies are like, I don't know, let's say you're an engineer, like one of the first engineers at a software company. Getting 0.5% of equity means that you were like one of the first people there. And those people are working there for 5-10 years and putting in ridiculously long hours. And so to a creator, getting offered 0.5% or 0.25% probably seems, like almost insulting, right? Like, because you're like, oh my gosh, I'm about to bring my entire fan base here. But that is where the biggest disconnect and sort of the biggest opportunity for this to really happen is when creators understand the value of equity and they're like, okay, wow, there's 0.5% that actually can be worth a ton. And the famous example that you and I were talking about off air was there's an example of I think his name's David Cho. He's a graffiti artist, and he was being hired by Facebook, and I think this is like 2005.
Yeah.
And they hired him to do like a mural in the office in 2005, and he was he asked for $60,000, and I think at the time they'd only raised like $1 million or something dollars, and they're like, we're not paying you $60,000, but we'll pay you in equity if you want. And Sean Parker was the president of Facebook at the time, and he was basically like, I think you should take the equity. And I imagine to David Cho, the graffiti artist at the time, it was probably like, oh my gosh, like I would much prefer $60,000 in a startup that I have no idea if it's going to work. And obviously, this is the most extreme example, but like that equity that he got for that service, I mean, I think it was when they IPO'd, it was worth $200 million. Let's say today, that's probably worth several $billion. So I think that is a perfect example of sort of the power laws. And yes, he lost $60,000 in the short term, but I mean, he's set for life, all from that one painting. So.
Yeah, you brought something up that's really interesting, and this is something that I've dealt with my clients and other clients in different companies, and I think some creators are just jaded in the fact that they think that if they're going to take equity in a company, it should be 10, 20, 30% of that company. And we have some software company coming in who just raised $1 million at a $10 million valuation. So for them to give up 10, 20, 30% of that company, for them is unfathomable. Like they would never do that, right? And so we've also lost out on a lot of deals because I think, our clients or other people have been a little too aggressive on the ask, where I think we could have taken, like you said, 1%, 0.5%, 0.25%. It would have been small at the time, but people have to realize like these companies are raising capital to scale. It's not out of the ordinary for a company to go from a $10 million valuation to a $100 million valuation in under a year. And so we have lost out on deals for that reason. And so that's been, one frustration of mine. And we've had to educate some of our creators on it. And now we're not only taking equity in companies that we promote, if we truly believe in the company, a lot of times we're also writing a check into that company. And we've made multiple investments in different game studios and things like that. And that will continue to progress, I think, with this industry. But if you're a creator, like MrBeast, like in 2017, we needed the cash. We really did. And so we wanted equity. We wanted to supplement half and half, but we really needed the cash, not only to operate, but to really film these crazy videos that Jimmy started to film in 2017, 2018. So looking back on it, yes, we would have loved to take all equity. We would have bit the bullet and been like, you know what, we'll take out a loan, we'll figure it out. But looking back on it too, like that money also helped us scale to where he is today. So if you're a creator, what are really like the pros and cons of taking equity as opposed to just taking straight cash? And also for all the listeners, like keep in mind, 99% of deals are just cash. These equity deals are still, something that doesn't happen very often. And I think companies are starting to, maybe explore that option, but we still haven't seen a lot of these.
Yeah, I think it's, and you can correct me if I'm wrong, but I think from like a creator's perspective, the only downside to doing, I guess there's two downsides. The major downside to doing an equity deal instead of a pure cash deal is just that there is a chance you never see the payment on that, right? Like, you like, and it's really opportunity cost. If you're MrBeast and you're doing a video on his main channel that isn't a pure cash deal and it's an equity deal, there's a chance that he just, I don't know, like he'll never see the upside on that video. And I mean, for me, like I think very long term, and I believe in just the power laws of investing and getting exposure to these companies, especially if you believe in them, which you should, then it's worth it all day. But I can see the other side of like, okay, yeah, I'm going to lose out on a huge amount of money from not doing this brand deal for this video. How am I going to pay for this video? All of that stuff is definitely the counter argument. And then the other part of it is that if you take equity in one of these companies, you are essentially becoming the spokesperson and the main endorser of this company. You are going to likely like exclude yourself from other companies within this space. And so let's say you take it, if you did Honey and then Honey now is rolled up into PayPal or whatever, maybe you're not able to work with any of their competitors. Like, who knows? But that's just you that's just the nature of it. In the same way that if someone invests in that company, they're not going to go and invest in another competitor unless it's very explicit. But yeah, that's those are my two sort of thoughts there.
Yeah, and it's like, think about Gymshark, right? And hopefully, I don't know, hopefully some creators took equity in Gymshark. I would imagine that if they did, they can't work with Nike, Adidas, like they can't work with those big sports apparel brands. Hell, they can't probably work with any apparel brand. So that's one example that I can think of where influencers have really like moved the needle for them. I think another interesting one is Dollar Shave Club. They were really running this influencer game, well before they were acquired. So I don't think there was a situation where any influencers took equity. To take this a little further along in this conversation, what should creators look for when they're taking equity in these companies? What are some of those deal terms? And you as an investor who invest in companies, if you're now in the creator seat and this company is saying, hey, we'll give you equity. And to a lot of creators, what does that even mean? Like, what's equity mean? So maybe we need to break down that a little further. What are you kind of looking for in terms of like what that deal is and what that deal looks like?
Yeah, I mean, I think it typically would look, I think structurally, you would see it through like advisor grants or advisor equity is probably the cleanest way that they would do it. And in the same way that companies bring on like technical advisors or strategic advisors who maybe know that space super well, there's a very similar dynamic here where it's like, hey, you're a big creator, you have a huge audience. We think that having you involved as an endorser of this and pushing it out to your fans, but also just like hopefully as a person that can be a sounding board and being like, would your audience actually like this product? And hopefully the creator will be super honest with that. That is the highest level of how it would work. I think those advisor deals, could range. I think obviously if it's super early stage, maybe you can ask for more. Like, you can ask for these like large percentages. But I think once you get past, I don't know, let's just say like 3 or 4%, you're basically becoming a co-founder of this business, and if you're becoming the co-founder of this business by taking 5, 10, 15, 20% of this business or even more, the whole dynamic of you being involved with that company changes. And you will, like, the expectations of you change as well. Like, you're now expected to be super involved and be promoting this. And again, because you have to remember there's tons of early employees who aren't seeing that same upside. They're seeing maybe 1% or 2% or whatever it might be, or 0.5% for being there really, really, really early. And they're working every day towards making that better. And if you're this creator who's getting 10% of this business and they make videos and they drive audience to it, but if that's not what they're working on every day and they're continuing to do other brand deals and things like that, it's just a totally different dynamic. And obviously if you're the founders of that company and you're like, why did I give up 10% to this creator who did a 1-time promotion or a 5-time promotion? That's not good for anyone. Like, you're just going to create people that are like really bitter at both sides. So I think the perfect situation in I don't know how this will actually look. Like, I think someone will figure out the exact format of this, but I think it looks like an advisor equity in exchange for number of videos or brand deals or posts, whatever it might be. And you basically structure it. Let's say, I don't know, a creator charges $100,000 per video on their channel, and you're like, okay, we're gonna get 10 videos from you. That's $1 million worth of videos in value. We will give you 0.5% of this company at this Series A of this company. Let's say the company's valued at, I don't know, for simplicity's sake, we'll just say it's like $10 million. That, in theory, your equity is worth, I don't know, I think that's $50,000 or something like that. Yep. So obviously to the creator, you're like, what the hell? Like, if you just do the simple math, you're like, I'm going to get paid $50,000 in shares of this company when I'm giving up $1 million worth of value. The hope is that this company, by you promoting it, and this is where I think it gets really powerful, is that if you're actually like, if you have a huge audience who will resonate with this, then you have the ability to directly impact the value of these companies. Like, if you're MrBeast and you're promoting a bank product or something like that, and then you're like, okay, wow, 10 million people are now going to use this bank product because he gets 20 million views, and let's just say there's an insane conversion, that changes everything for these companies. And as a result, your $50,000 worth of equity that you got today should be worth substantially more. And obviously, 5-10 years from now, that should be the life-changing money that, like, it's all in the power laws. There's going to be more often than not it's going to fail. That's just how this works. Most startups fail. But on the off chance that you work with one, and the reason why I think it's compelling is because as a creator with a huge audience, you have the distribution in some ways to brute force these companies into relevancy. And not in, like, you can't make them succeed, but you can definitely get people to talk about them or try the product. If the product ends up being poor and people didn't like the product, then that's on the company itself. But, like, you have the chance to really change the trajectory of these companies. And that's where I think, like, it can work really well for both parties.
So what I've seen these deals start to look like, and I remember what they looked like in 2018, and I think companies have gotten a little smarter now with influencers, is they're tying certain metrics to equity, right? They're saying, okay, we'll give you 1% or 0.5% of equity just for getting involved in doing a video. But then we're also going to give you X amount of shares on a, install basis, right? If you're able to convert X amount of fans, you get to here. And if you're able to convert another amount of fans, then you get to that next bonus structure that unlocks, say, more options or shares within that company. And so the deals that I've seen, at least that we've been looking at in the past 6 months, have been structured a little differently. It also seems that there is some vesting schedule associated with these shares. And for those of you who don't know what a vesting schedule is, it's just, basically an amount of time at which your shares in that company, take to get to a point where they actually have that value, where you actually really own them, right? And so they usually have like a 1 to, I've even seen aggressively like 4-year, which an employee usually has 4-year vesting schedule. But I have, seen offers now on a 4-year vesting schedule. So people are getting smarter at structuring these deals for influencers. That's why, to me, over the next few years, we're going to see these deals become normal. Whether it's in it, they're probably going to be small, right? 5,000 shares here, 10,000 shares here, vesting over a certain amount of years with bonus metrics associated with them. But like you said, if you're a bank product and you only have 150 to 200,000 users, which is in the banking space quite large, right?
Yeah.
Now, if you bring a couple influencers in and they take you from 200 to 250, I mean, the valuation of that business is substantially increased because of that influencer getting involved, right? And so, some of these deals, like I said, they've really been associated with actually bringing value, not just associating your name with the company and saying, hey, I'm this massive YouTuber, I have a lot of subscribers. They're saying, no, like, prove your actual value. We know that our company is already worth $50 million. Prove that you can make our company worth $100 million, and you will in turn reap the benefit. And so, it's exciting for me to see as the person on the other side of the table helping the influencer that, founders are starting to understand how these deals should be structured. And just to name a few more examples that you and I were talking about, I think, LeBron has done a really good job in this space. And he's probably, I would say, one of the pioneers of taking equity in companies. He wasn't a co-founder of Beats by Dre, at least not from my knowledge. Had equity in the company, promoted the company very heavily, was in commercials. They obviously exited, and he did well. I think Blaze Pizza, like you said, where you brought this up, another good example of, LeBron, he's more of a co-founder with this business, but like the business model, was willing to take equity instead of cash. I believe I saw him in some type of ad for Blaze Pizza. And so, it seems like the athletes have started to do this a lot quicker than the digital influencers. But now, like, we're seeing some of the biggest digital influencers jump into this space. And so to me, it's exciting to see what deals and what companies will actually exit with influencers on that actual cap table.
Yeah, I mean, I hope, like we saw recently with Charlie D'Amelio and Step in the bank, and I hope that she got equity for that. It seems like she's promoting it, and I think there's a couple other creators that are promoting it as well. But I imagine the value that she is bringing to that is, I mean, huge. And as specifically, we've been talking about banking, like the actual cost to acquire a user or someone to actually sign up for banks is surprisingly very high, or unsurprisingly very high if you're in the space. But as a result, I have to imagine that Charlie was given either a really amazing cash package or given upside in that company for driving all of those installs. And I hope that it was more of the latter, because she is bringing just a huge disproportionate amount of value, like, and a huge boost on day one.
Of course. And if you, okay, so you're in the creator seat now. How do you initiate that conversation, right? A company reaches out to you, they're maybe in startup mode, they've maybe raised a seed round. Do you initiate that conversation right off the bat? Do you lead with, hey, I want equity? Or, and this is kind of the route we've taken, let us provide some upside, let us show you that we can actually move the needle. And then we're going to come back to you and you're going to give us a good deal because you know that we can help you move the needle, right?
Yeah.
So if you're in that seat, I think there's two different routes to take. We've kind of defaulted to take the second route on some of the deals that we've got involved in. But as a creator, like, how do you think about bringing that up, and what does that deal look like?
Yeah, I mean, I think the reason traditionally why we haven't seen a ton of this is because, one, founders are super protective over equity, because they should be. They believe in their business. They hope that it's going to be worth, hundreds of millions, if not billions of dollars. And so they're like, yeah, like, I'm not going to give up equity to this person. And then as a creator, most creators are like, I just want cash and I want to get paid fast. And that would be amazing if you can wire me money like within a month, And so that's usually why you don't see it. And I think for the savvy creators and the savvy founders, there is this synergy, and I think you and I are both betting that this will converge more and more over time. But I think that as a creator, you need to either think about it as like, hey, I found this company really early, and this company is in its infancy, and I see a ton of potential to grow with them. In the same way that MrBeast grew a ton with Honey, right? Like, as Honey continued to grow, MrBeast continued to get more brand deals and become sort of a staple within that. And we saw it with David Dobrik and SeatGeek. And I think that, like, the dream is you finding a company at the seed or Series A and being like, hey, let's do 1 or 2 brand deals, and let's see how that goes. And it's like, look, my audience loves this. And you, like, as a company, you're also sort of betting on this person too. You're hoping that this person's going to continue to grow. And by working with them and being tied together, you're going to get a much better rate, right? Like, if you can make a case for Honey, it probably would have been super advantageous for them to do a deal with MrBeast back then as well, because I imagine his rate has only gone up as his views have continued to grow. And so in a perfect world, it's like both of you are at a point where you both need each other, you both want to grow, and it's like, let's tie our hands together and make sure that we do this together and grow. But I think as a creator, to actually approach it and I don't know, like, get to that conversation with founders and with those teams, it's really trying to, like, one, hopefully you believe in that business, like, to the point where you're taking equity in this business. You should be so amped and, like, have the strongest belief that this is going to be a big business, that you're either asking to invest your own money, or you're saying, look, I don't have a ton of, like, liquidity right now. I don't have a ton of cash to invest in this, but I want to be involved. I want to promote this. I'm willing to getting my brand deal money for this in exchange for stock. And the dynamic that is fun to explore here is like, if you told, I don't know, let's say for MrBeast as an example, and you're like, hey, we're going to give you 500,000 shares of this company. To him, like, that might sound way better than the equivalent of, like a quarter point of that company. But that's just the reality, is like that's what it might equal out to be. And so I think there's sort of this, like, messaging or just a storytelling along this as well, where creators and founders need to figure out how to, like, what is the terminology that both parties will actually understand and appreciate. Because, again, I think right now it feels very far off, and that most creators feel like they have so much leverage.
That's a really good point. So I've seen most founders usually say the percentage amount, right? And that's, to me, always the big mistake, right? It should be, because, like you said, 500,000 shares sounds a lot better than 0.5%, right? So if you're a founder out there, you're trying to get influencers interested in your company, that you first need to understand that 99% of them have no idea, what a share of a company is, or even how it's valued, right? And so you have to break it way down for them. You also have to make it easy for them to understand what they're actually getting and what it could potentially turn into. So, for us, like, we've actually asked, when we receive some offers, we've actually asked them, okay, don't give us the percentage, give us the actual amount of shares, because their next question is going to be like, what is each share valued at? Not how many overall shares are there in the company, because that honestly doesn't really matter. What really matters is like, okay, if I'm getting 10,000 shares, what's the value of each individual share? Not what percentage of the company is that, because you're incentivized to increase the share value. And so hopefully, founders, if any founders are listening to this and you're trying to get an influencer in your deal, that should be how you should lead with this deal. Is just give them the shares, not the percentage of the company. Because trust me, they will all be scared off if you say, hey, I will give you 0.25% of my company that probably doesn't even generate cash yet. They will all be scared off. And that is not how you want to start that relationship.
Yeah, and obviously there's the other part of it of like, there's investors in this company, and hopefully there's really smart investors who, and it's like, they just paid $1 million for 10% of this company. Like, they're not idiots, hopefully, and so I think they're like, from a manager perspective, it's also going and explaining like, look, these are really smart people to have at the table. They saw value, and they're the ones who are valuing it at this price and this price per share, and they just put in $1 million to get 10% of this company. And it's like, okay, like, you're gonna get this for free, or you're gonna get a 1/4 point or a 1/2 point of this company for free in exchange for your services. And like, the hope and the reason why I get excited about it is because everyone is fully aligned and getting this company to be worth a lot of money. That's like the dream alignment. Obviously, with a brand deal, you should be like, yes, I want this to work. But I think for most creators, it's much more of like, I just want to have a ton of views on my video, or like, I want to make sure I have a ton of impressions, and I want to make sure that like it performs well, so that way I can get more brand deals. I don't know if most creators actually care if like people convert, or if that actually helps the bottom line of the company. I'm sure at some level they do, but I think most of it is actually like, I hope my video performs well, so I didn't like just embarrass myself with that brand, and they'll come back. And whereas if you get equity, it's like, oh, what is the actual impact I made there? Like, did that move the needle? Like, is this company now going to be worth like $1 billion because of that? Because that is super exciting, and that is like the ultimate alignment. Whereas I think in the one-off brand deals, it's just a different dynamic.
Yeah, it also goes back to creator codes, right? They've almost given creators, some sense of ownership. Fortnite was the first one to kind of come into this. Now Roblox has a star creator code. I believe that's what they call it. And now, these influencers can see like, okay, if I shout out my creator code at the beginning of the video, does it convert, as opposed to, when I do it here or however else I do it, right? And so they're actually seeing what's converting. And so it's been interesting for me to kind of sit over here and watch and see how well some of these creator codes have done. And now every single game company is coming out with these. Now, you sitting in the investor seat, have you ever had a founder come into a board meeting and try and convince you to give an influencer, or to let him give an influencer equity in that specific company?
I've had a few discuss it. It's never gotten to a point where it's like, we are going to give X percentage or X amount of advisory shares for it. I'd say we've had a couple where it's on the small end of like, this creator or influencer or celebrity wants to invest, but in order for them to invest, they also want to make sure that they get advisor equity. As like, that is sort of the other side of this that we haven't discussed, but there's tons of examples where, I don't know, you have, let's say MrBeast investing in a game company. MrBeast invests like $50,000, and then it's like, that will be the equivalent of 0.5%, or I don't know, let's just say, we'll just use 0.5% as the example. And it's like, for me to be really excited, I want this to be like, I want to have 1.5% or 1% of this company. And so it's like, okay, well, we'll give you 50 or another 0.5% in advisor equity. And so it's like, the in between is, you gave that person the opportunity to invest, they invested, and so now they're like financially aligned, but now they're also getting like their advisor equity for additional services. And so from that perspective, I've seen that happen quite a bit where in order to get someone to say, hey, you can use my name, because there's tons of celebrities who are totally fine with disinvesting and being like, I'll invest, but like, please don't use my name, or like, I'm not don't expect anything of me as far as like endorsing, unless I get like additional payments or like still give me brand deals or give me equity in this business. And so we see a ton where it's like, hey, we'll give you some advisor equity plus the opportunity for you to invest. And especially when a company is doing really well, it's hard for anyone to invest. And so when they're opening up the opportunity to be like, hey, you can invest alongside Sequoia or Benchmark, we'll cut out $50,000 for you to be able to invest. We'll also give you some advisor equity. And here's the expectations of you.
Yeah, I think 100 Thieves is a good example, right? You've had obviously a few big celebrities on the cap table who are, I would say, somewhat involved. I don't know, obviously, but they were in a press release. I know Drake was definitely in a press release. You guys announced it. You guys announced Scooter when he invested, and I would guess that they at least know what's going on within the business, but they're not out there promoting the business every month, right? They were somewhat, at least Drake, probably more of a passive investor, thought 100 Thieves was cool, wanted to get involved in esports, but didn't really want to get his hands dirty. We're seeing a lot of that, in my opinion, of, creators, athletes, celebrities investing in companies passively. I think Ashton Kutcher is probably a good example of like a passive celebrity investor who's now like grown into a larger venture capitalist. And, he's been in a lot of great deals. I think that's going to continue to happen. We've seen now, some TikTok creators, a few guys from the Sway House, Josh Richards, Bryce Hall, actually start investing in companies and interacting with the venture community. I would imagine those checks are small, probably 10, 20, even probably $5,000, like small checks. But it's giving them a seat at the table. They're learning how these deals are done. They're learning how these deals are structured. I hope they're investing in things that they at least think they can help move the needle on in the future if they're ever called on to do so. And hopefully they get, advisor shares. Do you think that, at least digital creators who, right now are doing pretty well. A lot of people are watching YouTube. A lot of people are watching TikTok. Do you think more of them are going to move into that like passive investor role? I know as an angel, it's tough. It's all about having the right relationships, and none of these guys are going to vet deals. So have any, and to switch the question a little bit, have any influencers kind of leaned on you and Ludlow to help vet deals that they want to be a part of?
Yeah, for sure. I've had, surprisingly, a large amount of creators like reach out and be like, hey, I'd like to get involved in investing more. I'm super interested in tech or software. If you ever see anything interesting, like let me know. I think the key, and I think what you guys are doing with Night Media, and I'm sure you can talk about it a bit from the investing side. But like I think what's really key is the best deals. There's going to be people who watch this will be like, the best deals aren't competitive, but the best deals are hard to get allocation in for the most part, especially at the later rounds. Let's say A or B or something like that.
We've already witnessed that, like trying to squeeze ourselves into deals that like closed in 10 minutes, and we were like, whoa, hold on, we want to be involved.
Yeah, and so when that happens, like the pitch for venture firms to their investors in their fund is that they have proprietary access to these deals. They're seeing these deals before other people, X, Y, and Z, all of that stuff. I think for creators, they do get some level of access that other people might not have. And so if you are MrBeast and you want to invest in a really great consumer company at a Series A or Series B, people will make room, right? Like, I don't know if they will give them, the whole round, but they'll make room, and that's really valuable. And I think for Sway and Bryce and Josh Richards and Griffin, those guys, I think they're realizing that they can leverage their access and their fame so far to get into deals, especially ones that are competitive. And when you're writing smaller checks, and I'll say smaller is like anything less than $100,000, it's there is an advantage in that, like, most people aren't going to turn down $100,000 or $50,000 or $20,000 check from someone that can add value, especially by just having them tied to the brand. if nothing else, pulling them away from competitors, right? Like
Yeah.
if Mr. Beast invests in your company and another competitor emerges, like you'd much rather him be invested in yours than your competitor. That is going to continue to happen, and we're for sure going to see more of that. But I'd love to hear from your side, obviously, with Night Media, like moving into investing and doing some investing yourself. Like, how do you think
Yeah.
about this stuff?
Uh, I think the first deal we did kind of fell in our lap. Company's not announced yet, so I can't say too much, but we had never really thought about investing in software until we came across this company. And our philosophy at the time was like, if it's not a hell yes, it's a no. Right? That was like our only philosophy. I was like, if we're not super excited about this, or we're like, we would actually use and promote this company, then like we're not getting involved. What I do think is interesting, and you made the point about Jimmy, is that we've been now at the table in some of these very competitive deals to get involved with like Series A level. And they've all been like, hold on, we'll make room for Night Media and blank influencer because we want them on the cap table, right? I think if I'm a large venture capital firm, that usually doesn't happen. I usually they're not like, whoa, we want to make room for these four VC firms, because they're also not gonna write a $200,000 check. Most of these people want to lead the deal, or
Yep.
at least if they're not leading the deal, they want a huge allocation. And so we've gotten in some really good deals just because like the founders have wanted a certain influencer. They've been like, I want this person involved. I'm even willing to take a little more money to get them involved because we're closed. So from our standpoint, it's also a reason why we started investing in companies, because we found out that, okay, we can develop really good relationships with some of these venture capitalists, some of these angel investors, and we can kind of leverage them, and they can help us get into some of these deals. And they're all curious about this industry. I think most of them, at least the ones we work with, have invested in the creator economy in some way, shape, or form. And so it's been a very mutually beneficial relationship for us getting to know them, us sending them deals that we like, and then vice versa. And so it's just something, about being a talent manager is like, I get incredible access. Whether I deserve to get that access or not, I get that access. And it's wonderful. Whether it's like doing something like team trees, where I'm able to meet these, powerful people investing in team trees and writing checks, or if it's someone that wants to meet a creator. We had a situation where this massive celebrity, huge, has a very successful show for the last decade, reached out and was like, my daughter is obsessed with your creator, can we figure something out? Right. And so I kind of just get to sit back, and I get to be in the seat of like getting to meet cool people, getting to invest in companies, getting to do brand deals. So it's been a lot of fun, to be honest. And investing in companies was like that, one of like those steps that we just needed to take, and we were getting such incredible access. And the checks that we have written, like we've been so excited about the companies. And some of them, we haven't announced any of them yet. Well, actually, Dorian is actually public, so we invested in Dorian. That was in TechCrunch. We should not have gotten in that deal. That was like a last minute. Hold on, we're closing Thursday. It's Wednesday night. Can we make room for Night Media? And we were like, yes, please. Like, we will wire the money tomorrow morning. It'll be in your account Thursday. That was like last minute. Nobody else was getting in that deal. Just another example of like us getting access. So sitting in my chair, being a talent manager for the last 4 years, has been a lot of fun, and it's given me a lot of access, and can't wait to continue to invest, along with you guys and a few other people we have relationships with.
Yeah, I think most, like, you and I both believe to our core that the creator world is still just starting, and I
Yeah.
think founders who, I think young founders especially, are growing up and watching these people and being like, wow, these people have incredible influence because they've also influenced my own life. And I think for you and I, it's like we feel that because we live and breathe this space and spend a ton of time in it. But I think there's going to be way more creators that, in the same way, I don't know, if LeBron wanted to invest in some company, then a founder would probably, if they were a fan of basketball or LeBron, they would probably be like, yes, I'd let you invest in a second. And I think that we are going to see that same dynamic play out in the creator world where people grew up watching MrBeast and now they're starting companies, and
Oh, without
we see it
question.
all the time with Nadeshot, and I mean I'll talk to people and they'll be like very successful successful founders, and they'll be like, oh yeah, I watched like Nadeshot forever, and I'm like, what, like. And I'll tell Nadeshot, and Nadeshot will be like, "What? Like, what are you talking about?"
Yeah, he's an old man now in creator years.
Yeah. I mean, exactly. Like, I mean, people grew up watching him. I
Yep.
grew up watching him, and
Same.
so it's there's going to be way more of that, and as a result, the access that these creators get to hopefully amazing deals continues to go up. And
Yep.
obviously, all of this is with the caveat that like 99% of the time doing this like doesn't work out, but the power laws is just that if it does work, it really pays off. And I think the dream and what we always talk about is like helping creators build sustainable careers. And in a perfect world, they're investing or they're putting doing a brand deal for a company for in exchange for equity, and that company does incredibly well. And that helps, them and their families forever, or
Yeah.
really creates generational wealth as opposed to maybe that one time or 10 time payment for that brand deal.
Yeah, I agree with you. I think we just rounded first base in the creator community. We're definitely not to second yet, not close to third, like just rounded first base with everything going on, the rise of YouTube. And that feels weird to say it's been a decade. People also need to understand that creators are entrepreneurs. They started a business by themselves, usually with a camera or at their computer. And this is no knock on, athletes or celebrities, but most athletes, they play football, they play baseball, they play basketball, they go do that professionally. They didn't really create anything, right? Like Jimmy has created a massive content business. Preston has created a massive content business with Minecraft servers and a gaming studio and like all these tentacles to his business. These guys are entrepreneurs, and so it's just a matter of time before they realize like what amount of value is involved in taking equity, building businesses. And that's why I feel like there's you and I were thinking about this, there's not that many examples, which is sad, but there will be. It just takes time. And as we continue to run around the bases and get to second, get to third, creators will, it'll start to be the norm where not only creators are starting sustainable businesses, but they're also taking equity at early stages of successful companies that, probably will exit in 2 to 4 years. And, that person will be at the New York Stock Exchange if they go public, ringing the bell with the founder. And it'll be some massive YouTuber or TikTok artist that was like, I invested at the seed level and I believed in this company for 6 years. We just haven't really seen that yet, but trust me, it's coming. And I know you believe it's coming. And it's incredibly exciting, as, two guys who got in this pretty early on. I've been in this industry now for almost 6 years. So I would say I'm an old man in creator, age, like Nadeshot. So it's been a fun year. It's been a fun couple of years, but still, like, we are just at the infancy stage of this.
Yeah, and I think the key thing is just right now, if you're running a consumer company and you're starting a consumer company, you're essentially just paying taxes to Facebook and Google to advertise, and to a point where it basically just becomes super unsustainable. And
Mm-hmm.
we're seeing this a lot in the direct to consumer space, where you see certain companies go public, and then you look at their economics, and it's like they're paying a crazy amount to acquire users and for like one-time purchases. And I think that right now the arbitrage opportunity is to work with creators, and obviously when you can align them with equity instead of allocating millions of dollars from your Series A or Series B, you can actually brute force or get yourself to a level of, I mean, yeah, of real success without having to pay the incredible taxes that these your competitors have to pay in advertising to Facebook or Google just to be relevant.
Yep. There's a reason that Dollar Shave Club, Audible.com, Honey, every single mobile game company known to man uses influencers to market their companies. It works. Their cost per install or cost per user is usually very low. There's unfortunately still creators out there that don't really understand their value. And so, unlike a Facebook ad or, an ad that you have to buy through Google, those usually aren't extremely underpriced. You can still get influencers at a very cheap rate for the ones that don't understand the value of 1 million views on YouTube or 5 million views on TikTok. And so companies are also finding a lot of value here still. And so hopefully this was all helpful, to somebody. We wanted to talk a little bit about the investor community taking equity in companies. I truly hope that we see, some kind of example in the next few years of a creator investing, getting involved, helping move the needle on a company, either helping them get to somewhere where they can actually go public or, get acquired by someone else. So, hopefully everyone listening, that this was, a helpful conversation. We'll keep doing these, week by week. Where, Blake and I are going to start talking about what guests, we want on. Him and I text back and forth about all kinds of people. A lot of interesting news going on in the creator community. And so we'll start having some guests on here, once Blake and I can start reaching out.
Yeah, and if any creators who are listening to this actually want to get deeper into this space, feel free to message Reed or I, and I'm sure we'd be happy to help navigate it, because there is a ton of opportunity, and I don't think there's any shortage of interesting companies right now, especially in the consumer world, and so I'd love to be helpful on that front as well.
Of course, yeah, and feel free to reach out. We can link our Instagrams in the description. Blake doesn't use Instagram, so we'll link his Twitter in the description.
You can link it there, but it just sits there dormant. So I don't know what value that will bring.
Yeah, and neither of us really use TikTok yet. So Twitter for Blake, Instagram for myself. We'll put that in the description, and we'll see you guys next time.